Ladies and gentlemen, good day and welcome to the Bharat Highways Invit Q2FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kumar Singh, the Chief Executive Officer of the Investment Manager. Thank you, and over to you, sir.
Thank you, Shashri. Good morning, everyone, and I would like to thank all of you for joining us today. At the outset, I would like to wish a belated Happy Diwali to all of you. Hope you all really had a blast. I welcome you all to the Q225 earnings conference call of Bharat Highways Invit. While we'll be sharing the updates on operational and financial highlights on the Invit for the September quarter, we'll move on to the Q&A sessions towards the end. As of September 30th, 2024, the AUM of Bharat Highways Invit stood at 6,628 crores, having 8 HAM road assets with an average balance of approximately 11.3 years. As on September 30, 2024, the outstanding annuities of the project SPVs stood at 6,835 crores, and 49 of the total 240 annuities have been received. As an update on the acquisition of GR Aligarh Kanpur project from GR Infra Projects, I wish to inform you all that we could complete this acquisition in the September quarter. Your Invit had entered into share purchase agreement dated September 13th, 2024 with GR Infra for acquisition of 100% equity stake in GR Aligarh Kanpur Highways Private Limited for an equity consideration of 339.5 crores, out of which 98.6 crores was paid towards the equity and 240.9 crores were paid towards assignment of loan to Bharat Highways Invit. Accordingly, the equity shares of GR Aligarh Kanpur Highway Private Limited was transferred to the Invit on September 17, 2024. Pursuant to which Invit obtained control over this new subsidiary. I would also like to mention that Invit is also exploring acquisition of third-party assets and will continue doing that. We had board meeting of investment managers which took place on 6th of November, that was day before yesterday, and I'm very happy to inform that board of directors had approved a DPU of 2.20 rupees for Q2 FY25. Breakup of 2.20 is as follows. Interest is 1.66 per unit. Return of capital is 0.19 per unit. Dividend is 0.30 per unit. And income from other sources is 0.05 per unit. Income from other sources is nothing but the treasury income which Invit has earned on its investments. Again, I'm repeating, this 2.20 breakup is 1.66 is interest. Return of capital is 0.19, dividend is 0.30, and income from other sources is 0.05. Our cumulative DPU at the end of the second quarter, including the current distribution, stood at 9.20 per unit. I would also briefly update on the sector trend. So I think as all of you would be aware that in the road sector, awarding activities of NHAI and MoT put together during first half was comparatively a little muted. However, awarding activity by MoT is gradually pacing up, and up to August 24-25, 1152 kilometers of project have been awarded. We also witnessed construction of 2,961 kilometers of national highways up to August 24-25. Further, the Cabinet Committee on Economic Affairs chaired by Honorable Prime Minister had also approved the development of 8 national highway corridor projects at a cost of 50,655 crores across the country. Approval of new infra projects, increasing awarding activities, and completion of existing road projects in the country are expected to open the opportunities for channelizing the financial capital in the Invit space. And anyway, we'll be actively tracking the awarding activities across MoT and NHAI. I'll now pass it on to Harshil, who will take you through the financial details before we open up for questions. Thank you once again, and over to you, Harshil.
Thanks, Amit. Coming to Q2 FY25 performance on a standalone basis, the interest income on the loan extended by the trust to the SPVs was rupees 147.8 crores. As mentioned by Amit earlier, we have completed the acquisition of Aligarh Kanpur project. So the interest income factors in the interest income generated by for the period post the acquisition. The dividend received during the period from the SPVs was rupees 434.22 crores. The dividend income reflected in the P&L statement was utilized for distribution during last quarter and for acquisition of GR Aligarh Kanpur project. Further, EBITDA for the quarter was 575.84 crores. This was post adjustment for the diminution in value of investment, that is a non-cash entry. The diminution of investment value is on account of difference in the fair value and book value of investment. The reduction in fair value of investments was on account of cash upstream by SPV, which is primarily utilized for acquisition, as I mentioned earlier, for the acquisition of Aligarh Kanpur project and distribution made till date. On the debt side, during the quarter, we had availed external debt of 682 crores at the trust level, which was utilized to repay the existing debt of GR Aligarh Kanpur. The total external borrowing now at the trust level stands at 1179.5 crores, and the interest income on the same during the quarter was 25.05 crores. As additional debt of 682 was availed of last week of September, the full impact of the same will start reflecting from the next quarter. The tax outflows is only on the account of other income earned by the trust. On a consolidated basis, the revenue from operations was 156 crores, which primarily included O&M income, finance income on the financial asset, and change of scope income. The increase in revenue from operations is on account of increase in the finance income, which was in last quarter impacted because of the one-off event in Varanasi Sangam project. The other income for the quarter stood at 15.24 crores, and the total income was 171.25 crores. The EBITDA for the period was 134.74 crores on a consolidated basis. In relation to the NDCF at the trust level, the SPVs declared a dividend of 26.75 crores for Q2 FY25, and interest income, as I mentioned earlier, was 147.8 crores. Further, SPVs have made a repayment of 16.5 crores, resulting in a total cash upstreaming of 191.1 crores for the Q2. During this quarter, Invit had realized the receivables against the invocation of indemnity of Varanasi Sangam, which is getting reflected at the cash surplus in the NDCF slide on the page number 8 of the presentation. Further, the trust earned an treasury income of 4.09 crores. The post adjustment for finance cost, DESA reserve and trust level expenses, the NDCF works out to 97.50 crores. As Amit mentioned, the total distribution works out to rupees 2.20 per unit, and breakup was provided earlier. Thank you, and we are open to questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good morning, sir. Sir, so first question on the DPU. Now for this quarter, including the interim DPU, we have paid out 3.2 rupees per unit. So should we consider this as the quarterly run rate going forward, or was it just done? So how should we sort of look at the quarterly DPUs going forward?
So, Sarvesh, if you see at the time of IPO, at the time of roadshows, when listing with on course to list our Invit, we had given a guidance of 11.5 rupees. Now, if you see, we gave 3 rupees, then we gave 3 rupees again, then we gave 1 rupee, and after that was basically you can say interim, and this quarter 2.2. So while we come together 9.2, but as a guidance you can see in form of what we have been giving the earlier quarter, that only remains as a guidance, and our guidance still we stand to 11.5, which we had given at time of IPO. Of course, we'd want to better that, but the guidance remains the same, 11.5.
Okay, so somewhere between 2.75 to 3 rupees we can expect in the coming quarters.
Yeah, you are happy, means you are happy to do that maths, but the guidance remains, yeah, same, what you said. But if you do just addition, deletion, the number what you are saying, it comes around to that.
Understood. And secondly, I think earlier most of the DPU was being sent in the form of interest and dividend. But in this quarter, around 16% has also come in the form of return of capital and treasury income, which I am guessing is tax-free as of now. So,
That's right.
Is that proportion also going to be maintained for the future distributions, or this is one-off sort of a thing?
So I think maybe Harshil will explain it better, but what I understand is that, look, you can give interest anyway, SPVs has to pay interest to Invit, right? At whatever rate it's been entered in the loan agreement. So that anyway will remain as a, you can say, one as the substantial way of, income or of DPU, you can say. But of course, the composition is going to be a little bit changed because company law allows you to make a dividend only till the time your net worth is positive, right? So when the moment the net worth becomes negative, of course, you have to resort to return of capital. Treasury income is very less, you see, because treasury is like, whatever the Invit has, other basically income on his investment. So that, again, I don't think that is ever going to be a very, substantial or a very high amount. But yeah, return of capital is going to increase going forward. And major, I think, is going to be, its interest and the return of capital. Dividend to the extent of, the new SPVs you will keep acquiring, and to the extent that there will be some surplus at the SPVs level, that will be, say, passed on to Invit, and maybe that can become as a dividend. Otherwise, predominantly going forward is going to be interest and return of capital. Yeah.
Okay. And now coming to your acquisition pipeline, so, how is that looking at? And given that you have retained the guidance of the same DPU, do you feel that we will not be able to do a healthy sort of acquisitions that we were earlier targeting through this financial year?
No. I think we are very much on our basically on track. So we had given a guidance of 2 to 3 incremental asset acquisition for this year. We have already acquired one, and I think we have in the next maybe 5 months or so, whatever the remaining for the year. We look to complete 2 more. That should happen. Of course, the acquisition, there's one moving part is NHI approval, and so you can't be 100% certain to say give you a complete, final deadline, but or timeline. But I think we are on track to acquire those 2 assets. What we have given 2 to 3 assets we have given guidance. It's not that my guidance that what again I'm repeating that is the minimum guidance, and we are committed to better that. So if we acquire more assets which will be incremental or yield accretive in nature, of course this guidance or maybe the final DPU will improve.
And I'm guessing that the project IRRs of these acquired assets would be 11.5% or more as well.
Of course, that we had always maintained, and we remain committed that project IRRs will be in such a range that whatever we acquire will be yield accretive. So if you're given guidance of as of now 11.5, and since the interest rates remain same, there's no rate cut and all, I think my project IRR or IRR at which I'm going to acquire will be north of this.
Okay. So that means that given your cost of debt is 8-9%, so you will be able to better your overall IRR for the unit holders by acquiring these assets.
Yes. Yeah. Only thing you need to understand also that, basically my cost of debt is lesser than my project IRR, but that only benefits to the extent of leverage I have. So right now, as we speak, our leverage is only around 27%.
Yeah, up to 70% you can go, right?
30% you can go, but that only if you have 6 successful distributions and your Invit remains AAA. As of now, we don't have 6 successful. With this, we'll be completing 4 only. So post that, initially you can be only 49%.
Yeah,
so,
yeah.
Of course, I can say my threshold gets increased. Of course, then that benefit will be more. As of now, we are whatever our working is keeping the 49 in mind.
Okay. Yeah. And finally, you mentioned this number from NHAI on the project award, but that has been something which has been sort of been indefinitely people have been waiting for the awards of the road projects, but we've been seeing very less awarding in general. So if you can just enlighten us as to what is the ground situation like in terms of awarding and why it is getting so much delayed through this financial year, that would be great.
So if you see historically now, if you see awarding of NHAI, it has been more towards the second half than the first half. Actually, first half, in the first quarter, you only see the awards which are like spillover from the last quarter. So historically, if you see, so I think awarding anyway, and one more thing we have to keep in mind that overall underlying construct, which is is also going to change. So you can see maybe more awards towards BOT this year than HAM or EPC. So because of that, it may happen that, and of course, BOT, you have so many new concessions coming on. There are a lot of new concession, completely all new concession is coming, a lot of changes been discussed. It was sent to all the, basically relevant stakeholders for their comments and all. So now all those things are done. We expect that awarding of BOT and HAMs to pick up from the December onwards, and it should be in the range of what the guidance given by NHAI. Generally, as a road developer or maybe as a road Invit, we are not surprised to see basically, that the first half, of course, this year first half is also a little muted because of elections and all. But now since everything is in place, I think we should see the award to be picked up, say from maybe 11th, which you are seeing maybe November, December onwards, and maybe the Q4 you will see the sudden pickup of this.
Understood. Thank you and all the best.
Thanks.
Thank you. We'll take our next question from the line of Anant Mundra from My Temple Capital. Please go ahead.
Hello. Good morning, sir. Thank you for the opportunity. Sir, so just wanted to understand this better. When you say that you are acquiring assets at about 11.5-12% IRR, you are referring to the equity IRR here, right? Because when you see the value, that's 30%. Yeah. Okay.
That's right. Yeah.
So the debt is replaced as it is 70%. On that 30% is where you get that incremental extra return, because we'll be doing 8.1% borrowing and then that will be deployed at 11.5-12%. So that's where we'll earn the spread.
Yeah, but as of now, Anant, we are not at 70%, right? We are at a lesser. So of course, maybe my while my equity IRR is going to be what we said, is in the range of 11.5 to 12. But debt exactly is not going to be 70. We'll be reaching debt of 70 once we'll have say 6 distribution done. Then only we'll be reaching 70.
Got it. So I remember in the first phone call that we had done, you had mentioned that you aspire to be the best Invit platform listed in the country. And if I look at your peer who's held in high regard, I mean for someone who got in at the IPO of 100 rupees is enjoying a payout of about 15 rupees, so that they're enjoying 15% IRR, and they've even informally guided for doing better than that. So is this something that we can also achieve as and when we keep adding assets?
So if you see, we listed at 100 and in the month of March, and currently we are trading in the range of 113, 14, and we have also already say with this announcement, 9.2, which is the cumulative guidance. So I think now you can do the back math. I don't need to do that calculation. So how much on an annualized basis IRR, basically what we would have given, right? Including if you say the price also. So right now we have already given 9.2. We also listed, came out with the 100 rupees and now we're at 114. So 14 plus 9.2. So that way our annualized IRR is more than what you would be talking about. But of course that's a short term. I can't just say that it will be at that level. But we still say that what I said in the first call, I'm again reiterating that we continue to do that, and we remain to we work towards. We'll of course keep working towards to become one of the highest yield platform. So far as Invit is concerned, we also have to keep in mind that these are all our underlying HAM assets where we don't have a basically revenue uptick. So my annuities are fixed. So whatever we need to do with our cost, and then maybe how best we can negotiate the say my incremental assets with the incremental IRRs so that it becomes a yield accretive. So we are doing that. I think with each asset acquisition we can see we'll keep showing some uptick in our distribution.
Got it. So one more thing is we've paid 2.2 for this quarter, and one was paid as interim dividend. But I'm assuming that one was paid out as an interim dividend because the acquisition cost was slightly lower on account of one annuity coming in. So from the operating cash flows, we've paid only 2.2 for the quarter, which is slightly lower. If you see your guidance of 11.5, 12, from the operating cash flows, we should be doing 2.75 to 3 rupees. So why has there been a slightly lower payout this quarter?
No, so if you see, cash flows are fluid, right? And basically, if I have cash, right, same cash I can utilize to acquire asset so that my yield becomes accretive. Now, same thing we did. So we first set aside 390 crores, which again were from our cash flows only. Out of that, maybe amount we ended up paying for the asset is 340 odd crores. So 44 we distributed, but suppose it would have just 340 crores, then that 44 plus whatever we use now would have, we would have paid you, which again would have been 3 or 3.2. So I think guidance wise we are ahead. It is just a commingling of cash flow. Same cash flow I can use for acquisition, and if something remains, of course as per the Invit regulation we need to distribute, so which we did. So I rather paid 1 rupee earlier. Maybe I could have kept that, and I could have kept that, that 50, maybe 44 plus whatever we are paying, maybe 1 rupee and 2.2 now. I could have given 3.2, and for which maybe you would have said that you are on track on guidance. I rather broke up in two parts. Since we had cash, we thought let's give 1 rupee, because as per the IRR wise, if I'm giving 1 rupee earlier, maybe my IRR to investors will be better. The balance, whatever we left with the cash flows, we distributed now. So I think we are very much on track. It's just because 1 rupee I paid earlier. It's not that I'm not on the guidance. We should have given 2.753 and we have given 3.2.
Got it, sir. So coming to slide number 8, if I look at the net distributable cash flow chart that you've given, so if you can just refer to that slide. So at the SPV level, there are two payments that are happening. One is SPV debt obligation and the other is SPV encumbered cash. So one is you mentioned that there is no debt at the SPV level. So why is there any debt obligation there, and what is this SPV encumbered cash?
Yeah,
I think
so
yeah, I should.
Yeah. So Anant, we acquired Aligarh Kanpur, and whatever was the interest accrued till the date of acquisition, that has been paid out from the cash flow. So that's why you see a SPV debt obligation there. Plus, we did the refinancing, as I mentioned earlier, in the last week of September. So there are certain requirements of node use which we have to obtain from the lender. So since it was not, the lenders take their time to give that node use certificate. So that's why the DSRA and the major maintenance reserve, which is there in the SPV, was encumbered. So once we have now obtained it, so subsequently it will get released.
Got it. And sir, what is the third last number on this slide? Because it's not complete. Amount utilized for SPV ... So what is that exactly?
So As Amit mentioned, we had utilized, last quarter 390.5 crores. After that, we utilized 340 odd crores towards the consideration. Now, the total debt in the SPV was 745 crores, and we availed the external debt of 682. So the difference between the two numbers, so gross number is 403 and 390.5. So that works out to 12.8. So that number is getting represented there.
Okay. Got it. And sir, you did some kind of refinancing for the new asset that you acquired, and that is also at 8.1% level.
That's correct.
That's correct. Oh, all right. I think that was it from my end. Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, thanks for the follow-up, sir. So given the pipeline, this 4 distributions are already done, in the next 1 quarter or 2 quarters, we will be done with the 6 also. So now, by when can we expect to hit 70% leverage, given our pipeline from GR itself?
So 70% leverage actually, what guidelines stipulates that you can have a 70% leverage only when you would have done 6 distributions, you remain AAA, and those 6 distributions, suppose if I do 4 this year and I do next year, then I can go to 70% after the end of financial year of next year. So after the next financial year only I can do. So suppose if just for simplicity, if I do the distribution in month, say in the June or maybe in the month of May and in month of July or August, then I can go up to 70% only after the end of next financial year. So we'll see that whether we could finish the 6 distribution in this financial year itself, or it goes up to next financial year. But that's not a problem, because if there's a good opportunity comes, I think we can always go in the market, raise, and we can acquire those assets so that it gives us the higher rate. So for example, if I have something where I can do the discounting of 13-14%, right? I can always go back in the market and we can raise, and we can we can acquire those assets. So basically, just because leverage level will not become a constraint for our acquisition, and we have, as of now, we have decent headroom also, where within 49 also we can acquire.
So by FY26 or 27 we can reach, right? If not FY26, then at least by FY27 we can reach.
Yes, absolutely.
Okay. And apart from the GR assets, how are we looking at the pipeline? Are we finding, like you mentioned, attractive assets in the market currently?
Yeah. We are basically actively looking at third-party assets also, and we are seeing good traction from those sides as well.
But now, there are many other private Invits also which are actively acquiring the portfolio of HAM assets, etc. So given that competition, are you able to find decent IRRs on the assets which are available from third parties?
Yeah, we are.
Okay. Thank you, sir.
Thank you. We'll take our next question from the line of Anant Mundra from My Temple Capital. Please go ahead.
Thank you for the follow-up, sir. Sir, just want to understand, has there been any instance of NHAI delaying payments to any HAM asset due to reasons apart from non-maintenance of road? And if they do so, do you get any kind of interest carry on that?
Anand, so as I said on the call, the 49 annuities have been received, and I can very proudly say that till date, all those 49 annuities received on time. not delay. So of course, we haven't encountered any situation where we could get any kind of interest or from NHA. But just to answer to your question, they don't pay any interest even there's a delay.
Okay. No, I'm not specifically referring to our case, but maybe from the industry, you might be aware of some cases where they've delayed payments apart from reasons not attributable to non-maintenance of roads. So I just wanted to understand from that perspective and how are we covered for that risk?
No, I don't think I would have come across where there would have been delay from authority, where there's a non-compliance on the concessionaire side and, authority would have delayed and then maybe or there's a delay from authority side and authority would have paid any kind of carry on that. I don't think we would have come across any kind of situation in hand. If there could be any, but I don't think I'm aware of that.
Got it. That's it from mine. Thank you, sir.
Thank you. Participants who wish to ask any further questions may please press star and 1 on their phone. As there are no further questions, I would now like to hand the conference over to Mr. Amit Kumar Singh for closing comments. Over to you, sir.
Thank you everyone for coming on the call. We'll keep updating you all for any updates which we do. We remain committed to grow this TPO of this Invit and looking forward for your cooperation as always. Thanks everyone. Thank you so much.
Thank you. On behalf of Bharat Highways Invit, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.